Welcome back to the Wholesaling podcast. My name is David Dodge, and I am going to be your host today. And in today's episode, we are going to talk about rental properties and why you would want to own rental properties. We all want financial freedom and security, although very few of us have actually been taught how to build long-term wealth while earning an income. I'm here to teach you exactly how you can increase your income and build wealth fast. Rental properties, specifically using the Brrrr method, is a foolproof way to achieving these goals, while also allowing you to pay fewer taxes, invest more of your hard-earned money, and ensure a financially secure future for you and your family. Let's learn how to work smarter, not harder. Let's learn how to take control of our finances and make money work for you. If you are here today, you have likely accepted the fact that nobody can become rich and stay wealthy by just working for money. It's time to shift your focus from short-term gains to long-term wealth creation. I'm David Dodge, and on this show, I will teach you how to build wealth and create cash flow, all while paying less in taxes. Let's jump on in. So why rental property? Rental property is a foolproof way to create wealth. In fact, I've been buying rental properties for over 17 years, and I love rental properties. So the first reason I love rental properties is cash flow. And if you are unfamiliar with cash flow and don't know what cash flow is simply what's left over after you collect the income or the rent from your rental properties, and then you pay all of the expenses. The expenses might be a mortgage payment, it might be maintenance, it might be property management, it probably includes taxes and insurance and maybe CapEx. I mean, it just really depends on the property. But after you collect your rent and you pay all your expenses, what's left over is what we refer to as cash flow. And the cool thing about cash flow is it's passive income. It's actually taxed less than earned income. So number one, the reason why I love rental properties is because it kicks off cash flow. Number two, it creates good debt. So, I don't ever want to encourage somebody to go get into debt with credit cards or consumer debt or, any other sort of debt when you're not buying an asset. When you buy assets with debt, it's good debt. The reason it's good debt is because someone else is paying off this debt for you. When I buy a house and I use the Brrrr method, I borrow money to buy the house, I borrow money to fix it up, I go and I get it rented, and then I refinance, and I'm typically in these deals for little to no money in the end. But I still have debt. It's good debt because the tenants are going to pay these properties off for me. So number one is cash flow. Number two is good debt. We want good debt. In fact, I have a goal to create $100 million worth of good debt. It may sound crazy, but that's how we create wealth with rental property. So number three is leverage. I love leverage because that's what makes the Brrrr method so special. We're using other people's money to buy the property. We're using other people's money to fix these properties up. And I'm borrowing from private and hard money lenders. That's it. It's so simple. So I'm borrowing to buy, I'm borrowing to rehab. And then once I get these properties rehabbed, I will go and I will lease these properties out or have my property managers go lease these properties out. And then from there, I go talk to a bank or a credit union or a long-term lender that will refinance me out of these short-term loans with my private or hard money lenders. So other people's money, it's leverage, right? That is the most beautiful thing about real estate. You can't do that with other asset classes. Number four, appreciation. over a long enough time, real estate will typically appreciate. Now, if you're looking at a month or a year, yeah, it may not go up over the course of 3 months, right? But if you're in the game for the long haul, your real estate will typically appreciate, all right? I'm seeing somewhere between 2 and 6% appreciation typically every single year, and it compounds, all right? Next is the tax benefits that we receive from rental property. See, when you own a piece of real estate and it's a buy and hold, a long-term rental property, and it can even be a short-term rental too, right? But a buy and hold piece of real estate, every single year you get to depreciate that property on your taxes. And if you're unfamiliar, depreciation is really just a phantom expense. It's an expense that you get to offset your other income on your taxes without actually having to spend that money. It's phantom. And every year you get to depreciate your rental property. I love this right here because what it does, if you are a full-time investor like me, you can offset other income. So if you have earned income or capital gains income or other types of income, you can actually offset the other income with your depreciation from your rental property. It's an amazing strategy. And then last but not least is the ability to create wealth. I have created millions of dollars worth of wealth and net worth by using rental property. See, here's the thing about wealth. When you create wealth, you don't have to pay tax on that. You only pay taxes when you create income. So if you are focusing all of your time and energy and efforts on creating income or increasing your income, hey, that's great. But really what that means is that you're also creating a lot of tax. The more income you create, the more tax you're going to owe Uncle Sam. And when you focus your energy and your efforts on creating wealth, you don't have to pay taxes on that wealth creation. You only pay it on income, right? So when you create cash flow, that is income. However, it's taxed as passive income, not as earned income. And that is the most amazing thing about real estate is you get these crazy, amazing tax benefits when you are a buy and hold investor and you focus your energy on owning rental properties. So let's recap. Why do I love rentals? Well, I love them because they pay me while I sleep. They have allowed me to create time freedom as well as financial freedom and an excess of $18,000 a month in passive income, which is taxed way less than the earned income. I mean, all of these benefits, they stack on top of each other. So the cash flow is amazing. That's number one. Number two is good debt. Create debt that somebody else is going to pay off for you. Number three was leverage. I love leverage because it allows me to use other people's money to acquire rentals. Number four is appreciation. Over time, these properties are going to appreciate. They're going to be worth more. And in today's economy, that while we're printing all this money, the government, the purchasing power of our dollars is decreasing, right? Our money is worth less and less every day. But with rental property, the value of the property increases. And if you think about it, over time, the ability to pay back the debt, even though the tenant's the one typically doing it, becomes easier and easier because the debt, assuming you refinance into a fixed loan, that debt is fixed. It's not appreciating or inflating with the rest of the market and the economy. It's fixed. All right, so number four was appreciation. Number five are the tax benefits, and there are literally hundreds of tax benefits. Depreciation is just one. The cash flow being taxed at a smaller percentage or a less rate than earned income is another, and there's even more tax benefits from owning rentals. And then last but not least, guys, was the wealth. The ability to create wealth without having to pay a crazy amount of taxes. You see, about 4 or 5 years ago, I literally stopped focusing my efforts and my energy on creating more income. Well, maybe not the cash flow and the passive income. That's where I put my efforts. But in terms of just creating income without the wealth behind it is something that I stopped doing. Now I focus all my time and energy on finding rental properties that I can use the Brrrr method to buy. And if you're unfamiliar with the Brrrr method, it's very simple. It's buy, rehab, rent, refinance, repeat. All right, so it's just a simple strategy that we use to acquire these rental properties, which are assets, using little to none of our own money. All right, so if you are looking to learn more about rental properties and using the Brrrr method, head on over to wholesalinginc.com, book a call. We would love to talk with you about how we can help you buy that first rental property, or maybe you're looking to scale your portfolio of rentals to 100 or 200 units. And again, we are here to help. Thanks for listening. Signing off.